Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and happy Friday to you all. February 28th, last day of the month. We're getting nice, much-needed rain down here in SoCal, and thanks for that. We got a couple economic news releases, and these are high-impact ones. So, as we had mentioned all week, we've talked about the report, and that is the GDP revision for the fourth quarter. So, this is the second of three revisions. So, the final one will be coming out in March. But the last revision we had, the first initial one, came in at 3.2%. That the fourth quarter grew at 3.2%. Forecast was supposed to come down to 2.4, and it came in at forecast. So obviously, the initial one was not as good as we thought it was, so it pulled back. And then we got the Chicago PMI. This is the manufacturing in the Chicago region. We had a 59.6, exposed to a kind of decrease of 56, and it actually went up slightly up to 59.8. So good news because we haven't been seeing some good numbers in the manufacturing region overall. So this is a nice positive surprise. Then we also have the consumer sentiment. We had an 81.2, and we figured it would go up to 81.8. It went up, but not quite as far as expectations. So but not a huge, not movement, but it did go up, so decenter. So what that basically means is that people are feeling a little bit better about where things are at, not a huge from the previous reporting. And this is done by a survey that's brought to you by University of Michigan. And last but not least, we got the pending home sales for the month of January. So remember back in December, we had a negative reporting there, negative 8.7, excuse me for that. And for the month of January, it shows some positive, so a slight rebound at 0.1%. So obviously February's numbers will hopefully look a little bit better, but again, a lot of it's being blamed on the severe cold weather they begin back east. But in any case, a lot of it I think had to do with the lull that we experienced back around the holiday season. People I think kind of took the time off, got worn off, and just went into holiday mode. So we're going to jump over to the headline news here, and currently the stock market is up. And Fed members Placer and Bullard were had some comments earlier, and basically we're all upbeat. So that's going to help with the stock market as well. So we'll jump over to the bond market, see what rates are doing. So a nice little rally yesterday. Today we started lower, and now we're currently down about 15 basis points. So that does translate to pricing for the worst. So that means that pricing has come down a little bit. So it's approximately 25 basis points. So that no point loan yesterday at the end of the day is now about quarter point is the difference in the pricing on that. That could translate, depending on pricing, it could be as much as an eighth of a percent of the interest rate. But again, overall rates are still very good, so I wouldn't worry too much about that. But again, remember we do have that opening gap we had back around Monday, Tuesday, and at some point that will most likely close because this isn't really a solid foundation to keep continuing going upwards, as that will probably at some point will need to be drawn back and close that gap before we can go that route. All right, folks. Thanks for watching. I hope you guys have a great weekend, and we'll see you guys on Monday.